Welcome to the Recon Trader. In today's video, I will share with you the week 2 update for the small account challenge that I started over on BYBIT with 500 USDT. And so with that being said, let's get right into the weeds. And we will start over here on the Recon Trader journal for the small account. So this is all the trades I have executed so far for the small account. Now in the week 1 update, the account was up like 16%, but that was because I only literally had one trade, and part of that was due to the fact I was getting accustomed to BYBIT's price action, which is very different from the exchanges where I trade my larger accounts. But after putting in a little bit of screen time, I have become a little more comfortable with the BYBIT price action, albeit there is still a bit of a learning curve, but I am definitely gaining ground in that battle. And as you can see, I started week 2 trading a little bit more over on BYBIT, and I was still trading BTC USDT because, again, the moment you switch pairs, the price action again is going to take some time to get used to. But I did eventually make the commitment to try another pair, and in this case I started trading ETH USDT, and I pretty much dedicated the screen time during the entire Fed meeting where they were going to raise rates to trade strictly Ethereum. Oftentimes I like to trade right at around the time they make the announcement, and then I like to trade on through the actual press conference, and that is due to a ton of volatility. And for me, that is where I do my best trading, when the market is extremely volatile and there's a lot of volume. And pretty much all these reading the tape trades over here you see on the right hand side of the screen, they correlate to these actual trades. They were executed during either the announcement or the press conference of the Fed. Now some of the later ones would be afterwards, and there was still some volatility left, so I took a few shots, but they ended up being fairly small trades. And so when you start to see that volatility die out and the volume go down, it's time to stop trading. Now, if you're not familiar with reading the tape, what that actually means, if we jump over here to BYBIT, it's basically just looking at the order book and the recent trades. And so what you're looking for is who's actually in control, the sellers or the buyers. If you see a whole lot of weight piling up over here on the ask, which are these red numbers here, if you see, like in ETH's situation, a bunch of triple digit numbers piling up over here, well, more than likely that's going to be a lot of weight that prevents the price from going up, and eventually the price may get crushed down. And on the flip side, if you see a whole lot of orders piled up over here on the bid side, then that typically would prevent the price from going down, and thus the price in theory would start to move up. But you also need to take into consideration the recent trades, and if there's a whole lot of green on the screen under the recent trades, odds are the price is moving up and the buyers are in control and pushing that price up. However, if there's a whole lot of reds lighting up the board, then that means the sellers are in control and they're going to try to push that price down. And so that's how I read the tape, and perhaps in the future I'll do a video where I'm actually trading based on reading the tape. So you might want to shoot that subscribe button so you don't miss that future video. Now, since we're over here on BYBIT, if we jump down here to my closed P&L, you will see most of those trades that I executed during the Fed announcement and press conference. They basically announced the rate hike at around 11 o'clock my time where I'm located yesterday. And I took the first trade after about 1 minute of watching the price action, and I went long, and I was able to capture almost a $46 trade, and that I think ended up being around almost 10% on that one trade. Then a couple minutes later, it looked like the market was ready to roll over, so I jumped into a short. However, I did get stopped out, only to get back into a short about a minute and a half later and capture another $41 worth of profit. And you can see my loss was only $5 and my win was $41. And that is really the key to trading. You need to keep your losses extremely small and your wins obviously bigger than your losses. And when it comes to reading the tape, actually, the minute I enter a trade, if it doesn't move in my direction, I typically will go ahead and hit out or close the position. Now, as we scroll up right around 11:30, or in this case 11:40, that's when the press conference actually started. So again, I'm looking to trade that volatility, and it looked like the market was ready to move up, but you can see I took a small loss. Then I got a really small win. Now, this small win, in all likelihood, was actually me preventing a winner turning into a loser. So again, this style trade is if the price is moving in my direction and it's a winner, but then it starts to move back against me, I hit out immediately because I don't want a winner to turn into a loser. Now you can see the next trade, I actually went short almost immediately. It was like 2 minutes later, and I got a small win for another $15, but on a small account, that's all adding up. And then ETH basically reversed from this 1150 mark. The moment it broke above 1200, you look over here, it breaks 1203 is my entry. I actually get long, and I was able to capture $64, which at that point in time was probably around 10% profit. And then a couple minutes later, the price whips down below that 1200, so I get short again and capture almost $30. And so I just highlight all these trades to kind of show you how I trade when I'm reading the tape. It's really in and out really fast. The market itself is extremely volatile. And so you can see that volatility over here on the 3-minute chart for Ethereum. Right at 11 o'clock, this price whips down, it whips up, it's bouncing all along these wicks, and then the price sells off. And then it pumps up another huge wick to the top side. Now each candle's 3 minutes, so there's a whole lot of choppiness going on, and so there's a lot of opportunities to basically just grab some quick profit. But really, this style of trading is very risky, and you actually have to manually be clicking in and out of those trades. You are really your safety as far as a stop loss goes. You have to be very disciplined.
Well, that's my safety, sir.
And same with taking profit. You got to be quick on the trigger to take that profit. And unfortunately, sometimes when you click to take profit, the price turns against you so quickly, you can end up with a small loss or a big loss if you're not careful. And again, this style of trading can be extremely risky, and I've seen a lot of traders blow up their account trying to trade this market. It just happens to be a style of trading that, for whatever reason, works for me. It does not work for everyone, but it definitely works for me. And so that's enough jaw-jacking about those trades. The number you're probably most interested in is how much I'm actually up on that $500 account. And if you look over here to the right of the screen, you can see my account is now at $696.68. So I'm just shy of $700. And so if we jump back over here to the journal and click on the overview tab, you can see current equity $698.63. I think I have a few pennies I didn't include, and that's why I'm short about 5 cents over here on the journal. And then my total profit or loss so far in 2 weeks is $196, or a total profit loss percentage for 2 weeks. I'm up almost 40%. And at the end of the day, I'm not too disappointed. It is taking me some time to get accustomed to the BYBIT price action. But as you can see, week 1 I had 1 trade. This week I had a lot more trades. And hopefully in week 3, we'll continue to get more comfortable with the price action and perhaps see a larger gain. However, on the flip side, it's possible we take a step back. But the more comfortable I become with the BYBIT platform, the more likely we will continue to win the fights and thus eventually win the battle of growing this small account. 2 weeks in, up almost $200. Not going to complain about that with such a small account. And as I had mentioned in the previous update video, trading this small account for me is actually pretty difficult. When you trade, you typically want the amount you're trading to have some type of meaning. Not too much, because then you'll be trading scared. And then on the flip side, you don't want the amount to be too small, because then you will trade probably too risky, because the money doesn't really mean anything to you. And that's the problem I kind of have with this small account. So what I'm doing to counter that is I'm actually opening the position sizes for the full amount of my equity. I do not recommend that. And on my large accounts, I don't do that. I go anywhere from 3% up to about 9% of my total account balance when I open a position. But if I took that strategy and applied it to such a small account like this one, first of all, it would take forever to grow that account. Also, my interest in risk management on $13 or $15 or say even $50, it really wouldn't capture my attention. But when I'm risking the full amount of the account, that definitely has my attention, because the last thing I want to do is blow up this account regardless of the size. Now, a couple other numbers that might be interesting are how many long trades and short trades. I've obviously taken a lot more short trades, which should be typical in a down market. In a bear market, you should be doing more shorting than you are actually doing longs. And that's exactly what you see. 77% of the time I'm short, and 22, maybe 23% of the time I'm long. Now, a couple other factors. Winning long trades, I have 4. Losing long trades, I have 3. And so I'm almost even on my long trades as far as percentage-wise go. Dollar amount, however, is a different story, as you saw. As long as those losses are small and my wins are big, then I don't have to worry so much about the actual win rate itself. Now, in the shorts, I have 16 wins versus 8 losses, so you can definitely see I'm winning far more shorts than I'm actually losing. Now, another factor that plays on that win rate and why it's not that important, as long as you're having your risk versus reward ratio in your favor, you can see my average risk versus reward ratio is basically a risk of 1 and a reward of almost 4. And if we jump over here to the risk versus reward break-even percentages, a 1 to 4 risk versus reward ratio actually means I only have to be right 20% of the time to break even. If we look at like a 1 to 3, which is actually what I typically shoot for, except for when I'm reading the tape, I'm actually shooting more for a 1 to 5 risk versus reward when I'm reading the tape. But all my other trades, I'm typically looking at a 1 to 2 or a 1 to 3. And so if I'm shooting at this 1 to 2, I need to be right 33% of the time to break even, or with a 1 to 3, 25% of the time to break even. And so any win rate over 35%, I should be profitable as long as I'm sticking to this risk versus reward ratios. And clearly I am, but this number is a little skewed because of all of those reading the tape trades yesterday on Ethereum. So I think that's enough jaw-jacking for the week 2 update on this small account challenge. Currently up just about 40%, or almost $200 on the beginning $500 balance. So I'm sitting at just shy of $700. So with that all being said, you might want to shoot that subscribe button so you don't miss week 3's update. Also, if you like this video, do me a favor, spike a like. If you have any questions or comments, drop them in the comment section down below. I will drop a link to BYBIT in the description down below. And in closing, remember, never send your money into battle without first doing your recon. See you in the next video.